What do you do after you perform the instant assessment for your quilt and craft shop? That's what I'm going to talk about today. If you haven't performed your instant assessment, please go back and view my previous videos and download the free step-by-step Profit First starting guide by clicking the link below. My name is Jacob Curtis. I'm a CPA and certified Profit First professional and business coach. I started Curtis Accounting Solutions to remove the stress of doing the bookkeeping, payroll, and taxes off of quilt and craft shop owners and to provide practical business advice that helps them piece together financial freedom. I'd love to hear your thoughts and questions on today's episode, so please leave a comment below and remember to like, share, and subscribe. You need a Profit First bookkeeper. Now that you have decided to use Profit First system in your quilt and craft shop, you need to tell your bookkeeper. Why? Because you need their support. If your bookkeeper is not on board, implementing and using the Profit First system will probably not be successful. You need to get your bookkeeper on board. Ask them to read the book cover to cover, reach out to me for any questions so they can learn and understand the system and help support you. If they are unwilling to support you with Profit First 100%, you need to find a new bookkeeper like me. My team and I are certified Profit First professionals. Your Profit First accounts. You should probably already have opened your accounts, but if not, now is that time just in case you haven't. You need 6 checking accounts at your primary bank. The 6 accounts should be nicknamed or labeled income, inventory, profit, owner's comp, tax, and operating expenses or OPEX. A quick tip here, use your existing checking account as your operating account. Except for the income account, I recommend including your current and target allocation percentages in the account's nickname. For example, for your profit account, if you had a current allocation percentage of 1% and a target of 5%, then you would name it profit 1%, tap 5%. This will help you know exactly what percentages to use when you're doing your allocations or transferring that cash into the accounts. Side note, if you use Relay, the official banking platform of Profit First, you can automate your transfers. Click my affiliate link below to get started with Relay today. Your current allocation percentages. If you have a current allocation percentage of 0 in one or more account, like most of the quilt and craft shops that I work with, then use 1% as your current allocation percentage for those accounts. Remember, your current allocation percentages cannot add up to be more than 100%. So make sure you do some math and they don't add up to more than 100. Additional accounts. Once you have your foundational accounts opened and labeled, you will need 2 more accounts, profit hold and tax hold. These accounts should be opened at a second bank. These accounts hold the money that you only need to access once a quarter. These accounts are at a second bank to help you ensure that you don't rob Paul to pay Peter. With these accounts, we're employing the out of sight, out of mind principle of Profit First. Start slow. You know your current allocation percentages or caps, your target allocation percentages or taps, and your accounts are created and nicknamed. Now you're making some real progress, but you need to start slow. You cannot instantly start allocating based on your target percentages. Even if your business could do more than your current allocation percentages, you need to start slow. Start small to help you get into the habit. Set your current allocation percentages low enough that it will not be detrimental to the business and where there is no excuse not to try it. I recommend at least 1% in each account. If your quilt shop can't afford to set aside just a few percentage points of your revenue, you have a much bigger issue to deal with immediately. Your initial allocation. Now that your accounts are set up, it's time to make your initial allocation. When you look at your primary bank and your 6 accounts, the only account with any money in it is your operating account, except for any minimum balances that may apply. Subtract any outstanding checks and payments you have pending from that account and transfer the remaining balance to the income account. For example, let's say you have $10,000 in your operating account and you have $3,250 in pending payments and checks. You would transfer the difference of those, or $6,750, into your income account. Now you're going to do your first allocation. Transfer the money in the income account into all the other accounts, inventory, profit, owner's comp, tax, and OPEX, based on your current allocation percentages that you set. This is your first ever allocation. So continuing with the example above, let's say your current allocation percentages are as follows. 50% for inventory, 1% for profit, owner's comp and tax each, and the remaining 47% for operating. You have $6,750 in your income account. You transfer 50% or $3,375 to your inventory account, 1% or $68 rounded to the nearest dollar to the profit, owner's comp, and tax accounts, and the remaining $3,171 to the operating account. It's that easy. Now you can make financial decisions based on your account balances. It feels good to know that you have a system in place and financial clarity, maybe for the first time ever. Some motivation for you. But maybe the immediate picture is ugly, and that's fine, because over time, you'll be motivated to improve your allocation percentages. You'll be motivated to reduce your expenses, and perhaps even more importantly, you'll find ways to increase your profitability through innovation and thinking up new, better, and more efficient operations. This system will make it undeniably clear what money you have and for what purpose it is to be used. And with this clarity, you can make much better decisions to improve the financial health of your quilt and craft shop. Going forward, now that you've seen an example, do you have any deposits to make today? If so, tally up the deposits, deposit them into your income account, and immediately distribute the money to all the other accounts. Do this for every deposit going forward. But don't worry, we'll get into a rhythm shortly to make this process more manageable. Congratulations. I'm not saying that lightly. You've just taken a big step. This is likely the first time in your entire business life that you have deliberately accounted for your profit first. Before anything else, you made sure you addressed your profit, your personal income, and your tax responsibilities. That's a big deal, and it's a big step to a very, very healthy quilt shop. Update where your deposits go. Now that you have established your accounts and made your first allocation, we need to get the money from somewhere to fund the other accounts. And there's only two ways that can happen: sales or expenses. Let's start with sales. We need to update your credit card processor like Rain Payments, WorldPay, Shopify, or whatever merchant processor you use to deposit your customer payments into the income account, and whatever cash and checks you collect also need to be deposited into that income account. Expenses. Now let's review your expenses. This is especially important if you are currently spending more than 100% of your sales. Sales growth can and does happen, but it takes time and won't happen overnight. From all the quilt and craft shops and businesses that I've helped and met, it's pretty easy for most of them to cut 5 to 10% of their expenses overnight, such as frivolous costs like unused recurring membership fees, office space, that expensive car that is justified because it is an expense, and perhaps even extra staff who aren't helping your cause much. Cutting unnecessary expenses might bring you some emotional and psychological pain, but it is much easier than trying to make sales out of nothing or going out of business. Act your wage. You need to run your business based on what you can afford today, not what you hope to be able to afford someday. This means that you sometimes have to wait to hire someone or make a high-ticket purchase. When big expenses show up, you sit down and ask yourself, do we really need this? If you determine it would hurt your profits today, which is to say the longevity of your shop, don't buy it. I've shared and will share more on cutting expenses in other videos, but cutting expenses is easier and quicker than conjuring sales out of nothing. You'll pay fairly for what you use, but will use less, and you're going to love it. Get into a rhythm. The next step is to get into a rhythm. I recommend that the day you process payroll, you do your allocations first, then process payroll, pay any bills, review any pending inventory orders, and cancel orders if necessary, and then place new orders based on those allocations you just did. The key here is to do all of this on the same day. Do not spread it over multiple days. The day that you allocate money to your accounts is the day that you pay your employees and bills and review and place new orders. Doing all of this on the same day frees up your mind between allocation days to focus on other important tasks, like running your shop. The quarterly rhythm. And finally, once a quarter, pay your profit distribution and estimated taxes and adjust your current allocation percentages. Next steps, using Profit First saved our quilt shop. If you stick with it, it can help you too. Click the link below to download the free step-by-step Profit First starting guide. Tell me in the comments below or email me at jacob@jacobcurtiscpa.com if you would like help with this and piecing together financial freedom in your shop. Remember to follow me at Curtis Accounting Solutions on Facebook, Instagram, Pinterest, and YouTube. And thanks for watching. Talk to you soon.